The theme for this month is inspired by Hongkong Land, and I'll get to that in a while. That's why today I have 5 ideas of developers to share with you for September 2021. So what exactly happened to Hongkong Land? If you look at this article over here, Hongkong Land right now has the mandate to buy back $500 million worth of shares. Now, do you know how big 500 million is? If you compare that to what is bought back by OCBC, they bought back 50 million worth. And in May 2021, the combined amount of 21 companies was only 91 million. So Hongkong Land themselves, they're buying back with a mandate of 500 million. Of course, not within a month, but over a span of period. And that to me is a big signal that property developers are indeed very depressed. So if you're looking for ideas what property developer buy in Singapore, I have 5 names for you. And just as a quick teaser, CDL, City Development, is not on this list. I have this previous video that touched on CDL. And even though they've now just sold away the City property stake in China for just $1, I guess it's going to be a very volatile next few weeks ahead for CDL. And I'm also looking to find out more about the new management team. What is their style of doing this? What's their strategies moving forward? And if you're keen to find out where Hongkong Land sits on this list, continue watching on. Hi guys, welcome back. Number 5 on today's list is actually Guocoland. Now, Guocoland is owned by Mr. Quek Leng Chan, and he is one of Malaysia's richest person. Right now, Guocoland is developing this new project near Suntec. I don't know if you've been to Bugis recently or not. You see that whole new patch at the MRT station itself. That's actually Midtown. So it's actually a mixed development where the residents have been selling out quite well as far as I know. Not only that, Guocoland has actually developed before Guoco Tower and Woolwich residences, which the penthouse used to sell for a record price. And just to add, moving forward, Guocoland has won a new tender at an area near Yio Chu Kang, and that plot is $784 million worth. That is actually in Lentor. So why do I have Guocoland on this top 5 list? Because Mr. Quek has previously privatized GL Limited. So hopefully, if the value is deep, he might be interested to maybe scoop up some more shares. I don't know. Let's see about it. Because if you look in terms of 5-year price to book, Guocoland is indeed very depressed and they have many exciting projects coming up. So what do you think? Leave down in the comment sections and I'll move on to number 4. Number 4 on today's list is Banyan Tree. I haven't been to Banyan Tree before, but my interpretation of their resort is top notch. I don't know, maybe you've been there, but I haven't allowed myself to spend that budget yet. I hope to visit one of their famous resorts one day, but I'll share a bit more on what I understand about Banyan Tree as an investor. Previously, before COVID-19, I had a small allocation to Banyan Tree, and of course, it didn't do too well. Why did I get interested in Banyan Tree? The key reason is because there were some partnerships with Chinese developers back in 2019, if I'm not wrong, and there seems to be certain momentum with it. But lo and behold, COVID-19 struck, and as you know, tourism assets got wiped hard. So when COVID-19 hit, I looked at the whole portfolio and I realized that tourism assets is something that I didn't want to hold. That's why I cut losses on them. But I'm keen to follow how are they going to recover. Right now, there seems to be new activity. Far East seems to be an incoming partner. I hope to find out more information about it. And the key is if we look past 2021, tourism should come back in some form as we move to an endemic phase, correct? But beyond that, Banyan Tree is not just a tourism company. It is also a developer. They've been selling properties. If you see this 5-year chart over here, you realize that the bottom stable bar is property sales. Even with COVID-19 still running around, they are still doing sales in property. It's just the tourism asset that's getting hit. So they are a developer, they are developing resorts up and selling it to wealthy individuals. It's going to take a while for Banyan Tree to turn profitable, but as always, the share market is looking ahead of time. So what are your thoughts? Leave in the comment section. And if you like this video so far, smash the like button. It's taken our team hours to prepare this presentation for you. If that, let's move on to number 3, which is definitely a household name and it has malls that you've definitely visited before. Number 3 on today's list is one of the best performing developers in Singapore, undoubtedly, UOL. UOL is owned by the Wee family, UOB's family. And what you realize just comparing it against its other major peers, you realize that UOL's performance is way better than many of its peers, correct? Now just to give you a glimpse of what UOL owns, if you go to Marina Square, that is an asset that they own. Pan Pacific, if you go to say Park Royal Hotel for staycation, that is also owned by UOL. If you go to Novena Square, that is also owned by UOL in the commercial side. And as in this previous video I done, if I had $1 million, would I buy a residential property? I actually reviewed on South Avenue residences. So if you are keen for the video, I'll leave you the links below. South Avenue residences seem to be a pretty interesting project. And as of now, 30% of revenue comes from development. And UOL seems to be developing very nice residential properties. 25% comes from investments, which means the commercial assets they own, and about 6% plus is only hospitality assets. So if you think tourism is going to turn around very fast, maybe Banyan Tree is better. But if you think tourism takes a bit longer, then UOL might seem a bit better, especially when it's so strong in terms of its development and investment assets. Number 2 on this list, Hongkong Land. As you realize, Hongkong Land is probably the worst performing developer, but with this 500 billion pledge as a share buyback, I guess that creates demand for the share already. And naturally, when demand is more than supply, what do you expect? The share price will have to appreciate by some degree, correct? But that's mainly because of revaluation of their investment properties. They own many top-notch properties. Let me give you a glimpse. In Hong Kong, Exchange Square 1, 2 and 3. They also own the Forum. Well, what about in Singapore? You realize that they own MBFC, a stake of it, as well as ORQ. So these are definitely grade A offices, correct? And Hong Kong is actually developing land in China right now. And China property development always seems very risky, I know. But if you look at the total breakdown, you realize that 25% thereabouts is into China only, so not too much exposure there. And if you see in terms of investment properties and development properties, it's about half each. So that gives you some sensing of the risk of Hongkong Land. But if you look in terms of price to book, you realize that Hongkong Land is very cheap. On a 5-year basis, you realize that it's trading at even below 1 standard deviation. So what about dividend matrix? You realize that Hongkong Land pays about 4%? But if you compare that to a REIT, that looks to be slightly inferior. So that got me thinking, if Hongkong Land can spin away some of its assets into a REIT, maybe that could up its valuation by somewhat. Buying back shares is one method, but right now the price to book is really depressed. Management, hopefully they can find new creative ways to reward shareholders. Now, number 1 on today's list is actually Bee Ltd. Now, I'm a fan of Bee. I've covered it in the private members channel. So if you're looking to learn a bit more on how to invest better as well as to understand our value momentum matrix, click the join button and go for the private investors channel. So Bee, I rate it highly simply because it's been well run. If you look at their track record, they've firstly been the first movers towards Sentosa. Right now, they're still owning some Sentosa assets. And if you believe Sentosa property has to appreciate, then they already have certain proxy to it. But right now, they have pivoted more towards commercial. They have acquired a lot of properties in London and in Singapore. If you go to Buona Vista, Metropolis is a key asset that they own. And the key development for Bee is actually developments of Biopolis 6. This is a new tender that's worth more than 200 million, and it solidifies their asset base in Buona Vista. And an interesting thing to note is Mr. Chua has been buying back shares at about $2.80, and he already owns like 78% of the company. To me, that signals that he feels that the company is still undervalued, and that's why I have it high on my list as well as a place on my Shining Star category. So hopefully you've learned something. I'll sign off from here and invite you to one of these property videos that I've done before. Hopefully it can help you in your financial journey a bit better. See you there, take care and goodbye.